I guess we have to start off with what's been happening in Congress. I mean, is this as jaw-boning ahead of the midterm elections, or are we actually going to see some concrete sort of move coming out of the US?
Well, I think they've been very disappointed that once the Chinese said, okay, we're going to move, right, and then really nothing happened. And I think the analysis is that China has been moving to sort of a currency basket, and as the euro was weakening initially, the currency basket indicated that the yuan shouldn't really move, right? It's just like the Singapore model. So now that the euro is somewhat strengthening again and the Aussie dollar is strengthening, then they can allow the yuan to strengthen also a little bit. But it will never be enough to really please the people in Congress that really think China is a currency manipulator. No, so they won't move 5 or 10%.
In the current climate, everybody also wants a weaker currency, don't they?
Yeah, well, that's the issue, right? And we can't all have that. So, yeah. I think, yeah.
And the yen, obviously, with the big story this week, Bank of Japan, Ministry of Finance coming into the market there. But, you know, is something like sustainable? Because is it just like papering over cracks, essentially?
Well, true. You can argue that the yen is a little bit overvalued here, but not a lot, I would say. It's just that the yen in the Japanese society is a big talking point, especially, of course, amongst the businessmen. That strong yen is not really an issue in many other countries, like the strong euro wasn't an issue in Europe for quite a while. But in Japan it is, so that policymakers felt like they needed to do something, and so they did. But then it was only one-sided, right?
Probably also needed to be seen to be doing something too, which is perhaps more important.
Yeah, because one of the complaints, of course, of all the people looking at Japanese politics, and these guys sit there and do nothing, meanwhile their economy is collapsing, which is not really the case, because the Japanese stocks that we invest in have actually been able to cope quite well with a strong yen, and of course then their earnings may not look as bright as they would with the yen at 95, but at 85 the earnings still look good in Japan.
So, you know, we can talk about the equity, what it means for equities, but I mean, overall it's a bit like having these Bank of Japan interest rate meetings when you know they're not going to do anything, but they meet nonetheless, I guess. You know, similar to that.
And they have tea.
Which I'm sure is delicious, and ceremony no doubt accompanying it. But what about your strategy when it comes to these shares and equity markets generally? How does the currency situation play into that?
Well, in terms of the Japanese positioning, yes, a number of the good companies, so to speak, the companies that really care about their shareholders, they're export-oriented. So to that extent, you will always have a fair representation in your portfolio of Japanese exporters, and that helps when the yen then weakens. And of course, the whole thing about yen weakening is more about putting an end to deflation in Japan, because the strengthening of the yen, of course, further encourages deflation. So a yen weakening would at some point also lead to the end of deflation, which is a major positive then for the Japanese equity market. But it's that they're focusing now on the yen is just a symptom of this deflationary issue that they have, right? Because if you look at the strength of the yen and compare that versus the deflation they had versus other countries, the yen is not actually all that strong, right? If you have deflation every year and you have inflation in the US dollar, then obviously the yen should strengthen versus the US dollar.
Some have even gone as far as to say that fair value, if we were looking back to 15 years ago, would now be 75 yen.
Could be, yeah.
Talk to me about Japanese equities versus their Chinese peers.
Well, the one thing that you can say is that the Chinese have been very good in translating economic growth into profit growth, and that the Japanese have not been very good at. So when you look at the returns that the Chinese companies generate on their equity compared to the Japanese return on equity, it's very favorable towards the Chinese. And so business-wise, and looking at it as an equity investor, I prefer the companies with a high ROE. Fact of the matter is that the Japanese ROE has been under pressure for so long now that at some point you expect some sort of mean reversion there, right? There's 4 or 5% ROE in Japan, and there's 15% in China. So, yeah, looking out for next year, you may well have this sort of mean reversion that Japanese ROEs start to move up while Chinese ROEs are under pressure, because the government doesn't really want these very high profitability in banks.
Arnout, we've got to leave things there, but thank you so much for joining us. Arnout Van Rijn there from Robeco Hong Kong.